Hey guys, just like professional football players review films of their games, we review, when I do private coaching with clients, I request that they videotape, screencast their screens while they're trading, and then send those to me so I can review them, just to make sure that they're on track, they're doing things right, and also to see if there was any potential opportunities that they missed, or any big mistakes that they had that could be corrected easily. And so John sent me this for July 16th and July 17th. I haven't seen it yet. So let's take a look and see what he's prepared for me. It looks like John does usually a pretty professional job. Like he knows how to put graphics on the videos and stuff like that. So let's see what he's done here. Looks like he's starting out with a short position on the YM today, which is the right position to do. We've got the Market Timer XL going up here. This is the advancing issues. That's the volume into those. I'm sorry, that's the declining issues. That's the volume going into those declining issues, and he's on the right track. He is right to be short today, at least on this particular day. The market does look like it's going to continue to go lower, although it's up a little bit right now. It's about 7 points on the YM contract. So this section over here has to do strictly with our arbitrage between the YM and MQ. He did not do that, from my understanding, today. He did it tomorrow, and we spliced these videos together so I can review them. So he's hanging into his position. It looks like the market just opened. The light gray area is the pre-market and overnight session, and then the darker area here is the session as it just opened. It looks like it's pretty close to, let me see if I can get a time here on any of these videos. So if I go down here, it's probably about 9 a.m., 9:30, just after the market open. All right, so far so good. He's hanging in on a short position. He's definitely on the right side of the trade. Declining issues are advancing. The volume going into those declining issues, though, isn't really keeping up with it. So he's got to keep a really close eye on that. We've got Market Timer's supply and demand index is down. It's minus 2.6, so that's an indication that the market will decline as long as it stays negative here. Market Timer supply and demand for the NASDAQ is positive. So there's a little bit more money going into the NASDAQ today than there is going into the New York Stock Exchange. All right, so he's sticking with his position. I'm going to fast forward this a little bit just to see what he's done here. But typically what I'll do is I'll fast forward, I'll go through the trades, see if I can find any mistakes that he made. See, now right here, the market has declined as we anticipated. It was up 6, now it's down 6. But hopefully he noticed that there's a big separation here between the number of declining issues and the volume that's going into the declining issues. Big separation there. That's typically a warning sign. But it doesn't mean that he needs to exit his short position yet. We've got the strength index for the YM and the strength index for the NASDAQ. Now that strength index for the YM is really for the New York Stock Exchange, but we trade the YM. And so that's what we want to keep an eye on. Right now it's minus 1.7, and the NASDAQ strength index is positive 0.46. So there's more strength going into the NASDAQ than the New York Stock Exchange. We've got the supply and demand index now to minus 0.34. And so generally what we do is we look at this minus 0.34 and we multiply by 10 to say minus 34 points. That's the fair value, what we consider to be the fair value for the YM contract. We should be down about 34 points right now. So there's probably a little bit more on the downside that the market is going to go in order for, and then that's at the point, when you're down, if it's a minus 3.4 and we're down 34 points, you're at fair value, you're probably not going to get any more out of that market. And so you need to exit a short position if you have one. All right, let's keep going. Slow it down just a little bit. All right, So the market continues to decline here. The NASDAQ is still positive, except for the supply-demand index now is starting to turn negative. Looks like the NASDAQ Strength Index here is going to start to turn negative, so we'll have to keep an eye on that. He's still short, but market got a little bit of a bounce here. He didn't take that 105. All right, now he's highlighting these sells for some reason, so he must have been looking at these in order to take positions on the NASDAQ. Let's see what he's going to do here. The supply-demand index, or the Microtimer XL, indicates that the market is still going to continue to go lower. You can tell that there's still it's still going higher here. The volume is starting to catch up. Okay, now he's up 175 points, or $175. At this point, and the market is down 12 points. Microtimer XL is at minus 3.5. And so fair value for the YM contract today is minus 35 at this moment in time. Let me just back up a little bit because I want to see if there was an opportunity for him to cash out of this position. Right about there. At 180, we're at the low end of the range here. We've got Microtimer XL continue to go higher. And we're still at minus 3.55 and we're down 22 points. So at this point, since we're getting very, very close to fair value, I would have recommended that he take. He should probably take the profits on this position at this point because we're very, very close to the fair value here on Microtimer XL. All right, let's continue. So now all of a sudden, Microtimer XL screamed upward. It's down only 0.86 now, so fair value is only minus 8. So at this point, if he hasn't taken his profits, he's got 155 profits points, or $155 in profits right now. He needs to take that. He needs to take that off the table because now fair value is only minus 8, and so we're below fair value. That's when he needs to get out. All right, he didn't get out, so he may have a chance to continue, but it looks like the fair value here is continuing to, stay within that 8 to 2 point range. So 26 points now is fair value, but he missed that opportunity to take profits when we were very, very close to that fair value, and the YM was very close to that fair value. All right, let's continue. He may be doing a longer term. I'll have to ask him, but on a short-term trade, he definitely should have taken profits on that position. And now we see that the number of declining issues here, the volume going into it is starting to, they're coming together a little bit, but they're not very, very strong. A really strong reading on this is up around the 70-80% level, which is 0.8, 0.7. We convert those to percentages, so it's 50% is this middle line, 60, 70, 80%, which means that for the day, anywhere from 50% all the way up to 80% is on the side of a decline. If it goes that high, the larger the percentage, and the larger on this side of the 50% line, the greater there's more selling coming into the market. And so we see now that Microtimer is now in a minus 2.9, so there's 29 points of fair value in the market. However, we've got some strength index that indicates that the NASDAQ is starting to come back fairly strongly here as it's flattened out, and we're starting to get a flat line on the YM as well, so there's a little bit of strength coming into the market. And there we see the strength. The YM just popped up about 20 points. very, very quickly. We saw that strength coming in based on the strength indicators here. He did not get out of his position, so maybe he's doing something a little bit long term. I'm not sure. I'll have to check with him later. We're basically flat now on the Market Timer XL. It's only down 0.3, which is 13 points. So it's a little, fair value is just a little bit below the market right now. Very, very close though. The NASDAQ market supply and demand index is right at that zero line just about. The strength indicators on both indexes are starting to go higher, so we might get a little bit of a rally. We're only down 2 points on the YM and up 5 points on the NQ. The NQ was stronger. We never saw the strength index really get negative here. The supply and demand index went negative for a little while, but not very much. All right, so he's taking a look here at a arbitrage opportunity between the YM and NQ. Yeah, so we're getting a rally now. YM is up 5-6 points. NASDAQ is up 6 points. I'm just going to speed this up just a little bit. Fair value continues to be right around minus 14 or so. We're starting to see a little bit of a flat curve on the strength index for the YM and just kind of a flattening out here for the NASDAQ on the strength indicator. Supply and demand is a little bit negative on the NASDAQ. So we got the market higher as we anticipated with the strength index and the YM. It just kind of shot right up very, very quickly, and that's typically a sign, especially these little V bottoms are typically a sign there's some strength coming into the market. You should have exited the position when we saw it was near fair value on the supply demand index. So the supply and demand index remains negative here. It's down 21 points right now. We're up 10, so we're about 30 points away from fair value. We're starting to see the strength index just kind of bounce around here, not really doing much at the moment. So now we're starting to see it point down. The NASDAQ, though, still looks pretty strong, and the strength indicator is up. The supply demand on the NASDAQ is really a flat line, and the supply and demand on the New York Stock Exchanges continues to be hovering right around that minus 24 level. So as long as that supply-demand index is down 21 points, that's going to put some pressure on the market. So we've dropped about 20 points so far, and he's still in profit here. We're still seeing the NASDAQ strong. The strength indicator here is pointing upwards, so we've gone from about a +6 to plus 0.8, 0.5. Supply demand is still pretty much flatlined here, so there's no real indication there which way it's going. But the NQ strength index is heading higher. We're up 950.10 on the NASDAQ. So we got to about 11 on the NASDAQ and it's starting to flatten out. We'll see if it affects the price at all. That flattening out dropped the price just a few points, not much. Now we're starting to see the supply and demand index start to move down on the NYSE for the YM. It's still slightly negative, just slightly negative here on the diamonds at minus 1.76. But I'm looking particularly at the slope. It's sloping down. The NASDAQ is starting to flatten out here, and we're still up 850. Now we're starting to see a little bit more weakness come into the YM here in the NYSE. The supply demand is still negative. Now we're starting to see the NASDAQ strength index starting to decline. We're only up 3 points now on the NASDAQ. Now we're going negative on the YM. That strength index continued to go lower, and so now we're down approximately 4 points on the Dow. And let's see what the strength index continues to be minus 23. So that would be fair value and the time to exit a short position. Now we see a fairly decent drop in the strength index here, just below that line. That's why he's pointing that out. Once you break down through a previous low on the strength index, that means that there's additional weakness coming into the market. It's down 6 right now. Supply demand is minus 25. We're also starting to see weakness in the NASDAQ. Yeah, I'm on a conference call. Now we're only up $1 on the NASDAQ. The strength index continued to point lower. That's dragging the market down. Now we're starting to see the NASDAQ supply and demand index really start to get hit. Yeah, it's going down pretty sharply now. Now we see a minus 12 plus 8. There's a lot of volatility going on. A lot of volatility in the supply and demand index. There's a lot of stuff going on. It's up 35. We were down just about $1 here or so. He took a long position because he saw the market timer XL go up to plus 35, which is a very, very strong number. We're getting a bounce here off of that line. And he took a little bit of a scalp there. He just took a little scalp. Where's his totals? Oh, where's his daily total? I keep telling him to put his daily total up there. Okay, so now we're starting to see some more strength again, up plus 0.74 up here, minus 218. So lots of stuff going on with the NASDAQ. Lots of volatility, but he saw that plus 90, plus 120. So there's a lot of stuff going on here, probably a lot of opportunities. He should have taken that short position when he saw that. Let's back that up for a second. Because at one point it was, let me see, right? It was minus 218 at one point. Let me see if I can find that. It was plus 90. All right, yeah, he's showing me his plus 90. Now it's minus 138. So what happened was that plus 90 was taken out by the minus 138. And what that is institutional orders coming in. They had large blocks coming in, both buying and selling, but on the net, it's selling. So we had plus 90 minus 138. That's minus 40 to the sell side. Now it's minus 150 to the sell side. Minus 168 to the sell side. And so at this point, he did put up his P&L. Okay. At this point, he should have taken a short position on the NASDAQ. Minus 241, minus 348. So we're going to get a lot of selling coming in on the NASDAQ right now. There it goes. Yeah, he missed a beautiful short position here on the NASDAQ. Those big numbers were really starting to come through. The strength index was starting to point down, but when you see those large institutional orders on net selling, that's when you want to take a short position, and that would have been a very, very nice little trade for him to take. Looks like he scalped something here. He was up 80, now he's up 120. So maybe he took a little scalping position on that. So now the NASDAQ is starting to level off again. It's up plus 1.2, so we're probably going to see a little bit of strength coming into the market at this point. Looks like the sell-off is completed, but we'll keep an eye on the strength index here. Yeah, it's plus 1.1, 1.8. So fair value is up about 10 points on the NASDAQ. So we should see a little bit of a rally coming back, but the strength index is still pointing down, so we have to wait for that. All right, now we're seeing a flattening in the strength index, so we're probably going to go higher. And we got a nice little rally there. All right, now we're seeing, he took a long position here. Which is the right thing to do, especially when he started to see this number here, like plus 46. These are large numbers. Institutional buyers are coming in and buying the NASDAQ. We had a V bottom here on the strength index, and it's really kind of flatlining and going higher. And he took $60 on that. As soon as that turned minus 11, he took his profits. And we got a nice bounce here. We're back up 450 on the NASDAQ. Seeing a little weakness come back into the markets here. Had a little bit of a rebound. Now we're starting to see this turn in both the YM and the NQ Strength Index. The market timer XL is minus 4 now for the NASDAQ, so we could see a little bit of weakness coming back in. And it's minus 3, and if you multiply that by 10, like I said before, its fair value down is minus 30 right now, and we're up plus 10. So market supply-demand index, he didn't take any positions. Supply-demand index is starting to go a little bit higher here. We got an upturn in both the strength indexes, so we might see a little bit more of a bounce here. He took a short position. Oh, it was minus 10. Let's see if there was anything else there. He saw a minus 17 and a minus 10. Okay, so he said, well, he saw some institutional orders coming in on the negative side, so he's going to take net negative, so he's going to take a little bit of a short position. He took a short position here. Let's see how he does on this one. He was up 175. And he's just going to scalp it, looks like. So he's up now 190, made another 15 bucks. But we got the bounce that I was looking for. So what I'll do is I'll advise him that, when we see some strength in these numbers, even though we're getting some negative numbers here, if we see some strength, if the strength index is not confirming, it's going to be a little bit trickier to scalp those positions. Now we get a huge plus 365 on the strength index. Let's see if we get a little bit of a bounce here. He didn't see that, obviously, so otherwise he could have taken a long position. The strength index, though, is just kind of moving sideways. It's not really going higher. And the strength index, the supply demand went negative again, so it may have absorbed all of those. Okay, I'm not sure if you saw that or not, but we had offsetting orders. We had offsetting orders on the supply and demand index. So I'll go through this slowly. Right about. Take a look at this number right here. That's -9. There. Plus 3,870. Huge block order coming in to buy the NASDAQ. Huge. Now we got a minus 3,870, which pretty much offset the plus 3,870. So this huge block order here on the NASDAQ by institutional buyers, they came in and bought. And then it was offset by a very large block order to sell. So there was no net negative or no net positive on that. And that's why he didn't take a scalping position, but he's up 235 now on his scalps. We're starting to see the strength in the NASDAQ is continuing to go lower, and we are down just about 75 cents right now on the NASDAQ. And we're down about 2 points on the YM. Market timer XL for the supply demand on the New York is still right around minus 29 points. So we're still a little bit above fair value there. All right, you're seeing a lot of negative numbers coming in here. Let's see if he takes a short position. A lot of negative numbers on the supply demand, and the strength is starting to go down. Yeah, he didn't take the position, but I would have taken a short position right there. Let's review that again. So he'll watch that, and he'll see what I mean. So right at this point, we're basically neutral. We're up 1 point on the NASDAQ. The market timer supply demand for the NASDAQ is just at 1, pretty much a neutral number. We start going forward here. You're going to start seeing some negative numbers, minus 11, minus 10, minus 8, minus 9. That's the time when you want to start to look to take a short position. It must have come in a little bit earlier than that. Let me just take a quick look. Right about there. Okay, so this is where some of those minus 11, minus 9, minus 11. So, I mean, they're not huge orders. They're not huge institutional sell orders, but they're big enough that you could have at this point taken a position. So minus 9, minus 11, quite a bit. So right here at 73.94, you should have taken a short position. saw those institutional orders coming in -11, -9, -11. And then it just kind of went back to normal, but it was enough. There's enough institutional sell orders in here, uh, giving us plenty and ample time to take a short position right at this point. And the strength index continued to go lower. And there it goes right down. That would have been a nice little short there from around 73, 94, maybe 95 to 73.90. Yep, there it goes. Very, very good. Very nice. Now you don't have to really exit the position until you start to see some positive numbers here, some buy orders coming in, but it's already at minus 0.8, so it's almost at fair value now. And so I would definitely have thought about getting out of that as soon as it went down. It went back to pretty close to the zero line. So if you back this up just a little bit here, you can see it started backing up into here and to just less than -1, and that's where you really want to take that's when you want to get out of that position. So you were short based on the institutional sell orders. It's still negative. The strength index is continuing to go lower. And now we're not seeing any big numbers down here, so there's not much behind this move. And so you could have either taken a position there, and right there. I mean, you wait for that little sharp dip in there. That's the institutional sell orders completed in the marketplace. So what happens is market timer supply and demand index will pick up those orders as they're entered, but it doesn't hit prices until like a few seconds later, like you saw. So we see those sell orders come in, market declines. On a sharp decline like that, you want to take that scalp and exit your short position. This little blip here is pretty much, there's not much going on here. It might be some residual orders, but it's more likely retail traders coming in at the tail end of the move, which is the wrong time to get in. And there's no selling really left to in the NASDAQ at this point. All right, so we saw this is mostly retail investors here. It's going a little bit lower, but you can see the numbers are much smaller. It's not -11, 12, 200, 300. It's only -1.52. So it's pretty much retail investors coming in, trying to scalp a little bit out of the market, and they would have gotten a piece there. They definitely would have gotten a piece. He didn't take that, which is good. I'm glad he didn't take that, but he should have taken a part of this. For sure. So this is very weak here, -1.3. This decline is not going to last. Yeah, it's still -1.4, and we're already starting to go higher. When retail investors come in and start selling the market, the institutional orders and market makers just simply buy those up, and then they take the market higher. So he did a little scalp. He's up to 305 now. I missed that scalp though. Let me see what he did. All right, so he was short. I would have advised him not to take that short position. It worked out well for him, but it was only -2, it was -3, maybe at the most -1. That's retail investors coming in and trying to short the market, and market makers are just going to buy, soak up their contracts and take the market right back up again. So at this point, he was lucky. Let's see what he finished with. He's up 315 for the day. He's open. He's got an $80 open position. He's up 90, 325, and you better get out before they take this market. Market makers are just going to make this market go higher. So now he gets out. So he's up 305. He could have been up a little bit more, but we'll see. The market's just kind of hanging around. We got an upturn here on the strength index. And there they go. They're gonna take it right up now. Strength index is turning up. The market makers may take one more shot to the downside just to see if they can shake out any more retail investors who are either long or short, so they can buy up their contracts. But now they're taking it right up. So he took another short position. Okay, so let me see if there was any large supply and demand numbers here on the NASDAQ. I don't see any. They're just like minus 1.2, so they're very, very light here. And so those are primarily retail investors who are selling off the market. Those aren't institutional investors. So retail investors are coming in. They're shorting the market because they see it's weak. They think it's going to continue to go lower. But really, the strength of the move here is very, very flat. That's because there's retail investors involved, and the supply and demand is only minus 1.19. As we saw earlier, the large block, the institutional orders are always in the hundreds, or at least in the 40s, 50s, 60s, 70s, 80s. A lot more than just minus 1. And so at this point, it may dip a little bit here and then continue to go higher. But he took those two short positions here. He's really lucky he got out of those because he saw this was still negative and the strength index was still negative as well. But he better not do another short position or I'm going to yell at him. So we got a sharp move, and he took another short position. Okay, well, whatever. He's still not seeing that these are very low numbers here. Back up. I'll go forward again. These are very, very small numbers. And so even though there is some pressure, it's retail investors doing that pressure. He probably saw the strength index declining. That's why he decided to take the short position. But he better not last long in there. He's up 305. Yeah, you better take a profit when you see it. Strength index is still pointing down, but this is only 1.2 over here. You may have seen a large order in here, but I don't know. So now he's down $30 because there really isn't any heavy institutional. I'm going to back this up just a little bit. I want to keep an eye on this number. Now there's no real selling going on here, so you can tell that it's only retail. And typically you want to fade retail investors. So if this number is very, very small here, then there's not going to be much momentum behind the move. There's not going to be a lot of strength behind the move. And so what you're going to see is you're going to see a little bit of a dip, and then it's going to completely reverse on you as market makers come in. And okay, so I guess that was the end of the session. All right, so let me just back up here and see what he did. He's into another trade here. Okay, here we go. So this is the end of his day. He was up, all right, he was only up 28. He was down 25. See, these numbers are very, very small. So like I said, it's retail investors coming in, trying to push the market lower. Never works. Market makers will come in and just eat them for lunch. And so now you've got, he's down a little bit here. Let's see if he gets out. Let's see. Oh, he puts in a stop order, which is smart. Okay. So what he's betting on is that the strength index is flat. He's minus 1.2 on the supply and demand. They never really got a big negative number, so there were no institutional selling at this point when he went short. And so now he's smart. He puts in a limit to buy back his short position. and hopefully he'll get a chance to hit it. Yeah, he's showing me where it is. Yep, there it is right there. So hopefully he gets to hit it because this supply demand is very, very weak here. Yeah, he's lucky. So he got it hit, but I would not have taken those short positions that he did in here. Supply demand was just pretty much flat the entire time. He's lucky he ended up with $335 for the day. Just scalping today. All right, so I think now he's going into Wednesday. Did a nice job with the graphics. All right, so he's going into Wednesday, July 18th now. Okay, so now he's doing, So now he's doing the arbitrage, volatility arbitrage between the YM and the NQ here. And he's got, it looks, if he did this right, and it looks like he did because he's up about 390 right now. He went long YM. See, when this line here is the difference between the YM and the NQ. When it's going higher and it crosses that blue line, which is it's a standard deviation momentum line. And so basically what he's doing is looking for that. He's also looking for a positive number. This is a script that we developed down here for arbitrage opportunities between the YM and NQ. And they're both up right now, so they're both higher. They're just, the yellow line is just at 0.11, which is positive above the zero line. And as long as it's positive, then it means that the YMNQ will continue to go higher. At this point, the supply demand index, the strength indexes don't really matter too much at this point. We're really looking at this Chandy momentum oscillator. We've got a couple of other indicators that we use for this particular trade. It doesn't matter if the market's going up or down. We're both long and short the market at the same time. What we're doing is providing an arbitrage opportunity between the YM and the NQ based on strength, based on volatility, based on a number of different factors. And so he took that trade when this momentum indicator, the standard deviation momentum indicator, was crossed by the difference between the YM and Q. And we do a ratio between the YM and Q. And what we do is we look at the ratio every single day, and then we enter it into our equation for the symbol. And so he's doing pretty well. In fact, he's making money on both contracts, which is unusual. Actually, typically one contract will be down, one will be up, because you're both long and short the market at the same time. But he hit it right, and as long as this continues to go up, he'll make money. It's at 75 now. What we do is we measure the difference between that line and the standard deviation, the blue line. And once it gets to about 80, he needs to exit this position. So we're getting close to 80 right now. 75, 77, 78. He should exit the position right now. If he exits the position right now, because there's a difference between it's about 70 points. It's 78 to 80 to 8. So this standard deviation line is at -8. This is at 78. So yeah, it is 80. So it's 76 here. There's 86 rather. So as soon as the difference between these two is 80 or better, then you want to exit your position, because those kind of positions typically have some sort of a pullback or something like that. So you've got a -8, you've got a 78 plus a -8, and the difference is approximately 86 points. And that's where you want to exit the position. So right now he's up 130 and 305, or $435 on this particular trade. And it looks like he wasn't in it that long. Let's see, this is on a 1 hour chart. So maybe he's been in it for less than an hour. All right, let's see if he got out. It went to 79.80. He should definitely get out now. And if he isn't, I'll just back that up a second. At 80, now he's almost 90. The difference between these two is almost 90. He really needs to get out, and he's up 445. He didn't exit the position. Okay, so it's probably going to pull back a little bit here. Yeah. That's typically what happens when that spread between the standard deviation momentum line and the difference in the price gets to be about that length. Let me speed this up and see what he did. Yeah, so it's starting to pull back at 70, 68, 67, 71. Yeah, so he didn't exit the position. It's back up to 87 though, which is good. Give him another opportunity. No, still the next. So that's one of the mistakes that he's made in this position. I think he was looking for additional profits. And what we found was that when the difference between these two lines is about 80, then you really want to exit that position. That's about the maximum move that's going to occur in a 1 hour period. And so, over a 1 hour period, that's probably about the best you're going to do. He was probably looking for something like this, in which the difference would have been enormous. But that's not typical. That is not typical at all. So maybe he was thinking he could ride it a little bit. Let's see what he did. Nah, he stayed in. So see, here's a good illustration though. He's still up about 300 and 320. So 320. And we started to dip back down a little bit, but he's still making money on both sides of the trade. And you can see that the YM hit a new high while the NQ is very, very weak. And that's what makes this really work, is that the strength of the YM, when the strength of the YM and the volatility indicators that we're using indicate the YM is going to be stronger than the MQ, we take a long position. A long position to us is a contract in which we're long the YM and short the NQ. If we're taking a short position where the difference between these two contracts is going to go lower, then we short the YM and are long the NQ. So now this is pulling back pretty significantly here. He should have gotten out when it was plus 80. Now it's only plus 45, plus 40. So yeah, so I need to talk to him about that. Let's see what he did here at the very end. All right, so he's up to 90. He's got a couple more minutes left. Yeah, he's lucky it's come back up a little bit. Okay, yeah, presumably that's where he got out. So he was up $300. He could have gotten out with a lot more profit, but he was up $290 for the day. Very easy trade to make, and they're pretty consistent and reliable. All right, guys, hope you enjoyed that video, and let's continue the presentation.